I'm joined today by Rob Hammond, one of, in my eyes, the market leaders in the surveillance world. I'm sure in many others' eyes as well. To talk about some of the bits and pieces that we also talked with Simon Friend about, and I've referenced you, we're going to have conversations on both sides. One of the things we're asked most frequently is, realistically, can I make the move from the front office into a surveillance role? And as a man who A, has done it, but also B, has hired countless people over the course of time that have also done it, I thought no better person to ask the question of than yourself, Rob. And in that, guys, can you do it? And how do you go about doing it?
That's a very key question, Ben. I get lots of unsolicited inquiries from contacts, friends, and ex-colleagues exactly along those lines. And I think it's fair to say that so much of it is mindset from really where you're coming from on a front office role transition. So much of it is about genuinely wanting to make that move, and I think also dependent on really what kind of role you have in the front office. I mean, as you get more senior over the years, you start to run businesses, whether they be trading or sales or syndicate businesses, almost doesn't matter, in the sense that as you gravitate to more senior roles, you tend to start to look at a lot of factors around the control environment anyway. It becomes part of your kind of daily routine. I mean, lots of people may think that it's a tricky transition, but if you really think about maybe what you're doing when you're running perhaps a regular sort of trading business, I mean, you're making sure your traders are trading within their mandates, trading within the limit structure that they've been given, and so on. You're already operating controls, at least managing controls, without even really realizing it. And I think so much of that is a contributory factor when you get into making that move. Timing-wise, I think quite a number of business professionals have made that transition already. There's a limited number of senior roles, obviously, so there's not an endless supply of roles to move into. However, I do think as the business changes, and as indeed the whole kind of surveillance world changes, there are new roles being created all the time, new types of roles. One of the things I think that's worth considering is the fact that surveillance isn't, in many banks, a standalone function anymore. I mean, in the institution where I work, we slightly unconventionally, I think it's fair to say, have the bulk of surveillance sitting in the first line of defense. We actually sit inside the business, inside the control office. And I think as that becomes more popular, there are a number of banks that have relatively recently joined in and made that transition. What it does do is it brings all of those what I would call slightly more traditional control office functions into play, because essentially, if you're going to build a fairly powerful and quite usually fairly expensive, at least in technology terms, surveillance capability, why would you limit just surveillance as being what that team actually does? You can run through the same kind of systems in many cases, and definitely through the same kind of people. The regular kind of front office controls that you're looking for. I mentioned a couple earlier, the kind of controls over mandate checking, abnormal trading patterns, that kind of thing, monitoring cancel and amend flows. The whole world of surveillance, I would say potential rogue trading, and general control of how a front office function operates, all starts to knit together if you put it in the front office. Mm-hmm. And I think that's actually very encouraging for anyone that does want to make that transition. There are new roles that are kind of falling into the surveillance territory. It's no longer surveillance. I mean, my technical title is Global Head of Front Office Conduct Surveillance. Conduct, of course, again, in the reality is, if you're running a surveillance team and you're looking for inappropriate conduct, that all ties in very nicely together. And I think the slightly unusual thing we've put together in BNP Paribas is we've actually got the conduct agenda linked into that as well. So if you look at the kind of culture, conduct, surveillance triangle, We're monitoring really two things. We're looking at conduct and culture as a separate item, but as a feeder into surveillance. If you get the culture and conduct right, you're going to get less inappropriate behaviour in the surveillance space. So linking those three together, really quite important, I think.
You referenced at the start people in leadership roles making that transition. Do you think it's easier to make the transition at a leadership level, or do you think it's easier at a more junior level?
I think there are roles in both. I have a number of SMEs in my team globally in all three principal regions who are ex-traders, ex-salespeople, and their SME knowledge is really important, that's for sure. Where the function is moving, it is of course, it's becoming much more data-driven. So if you look at a kind of identikit picture of a perfect sort of synthetic surveillance officer, it's somebody who's maybe part trader, part lawyer, part compliance officer, part data scientist, part programmer. If a fictitious individual existed like that, I'd hire them in a second.
Yeah.
So I think if you've got some market knowledge, particularly if it comes from perhaps a more derivative kind of background where you have some sort of quantitative skills thrown in there, you're not averse to perhaps coding up something in Python, for instance, the kind of fashion language of most of the on-desk systems these days. Those kind of roles are definitely there. You don't need to be a business leader to come into the role.
Let's try and break that into parts then, so we can give good answers on each bit. Do you think it's easier from trading or from sales?
I think generally it's easier from trading, purely because the granular knowledge of what constitutes market abuse is kind of second nature to most of the traders. They're used to working within a framework of quite tight rules already. They're very familiar with what they can and can't do. Most banks have an internal sort of conduct handbook of some sort, which dictates how they can and can't execute trades and so on. There are general behavioural standards, of course, that every bank wants to enforce for broader commercial reasons as well. So I think traders find it a little bit easier. Some of the sales staff are a bit less aware of some of the granular elements within the sort of market abuse space. But again, there are other roles. Lots of the stuff that we're looking at now really looks across that kind of conduct and culture space as well. So you don't have to be a granular market expert to get a role. There are roles for others too.
You mentioned the coding piece. If I'm now thinking about making that transition, is that a good first port of call for me to prove to you I've got value? Like if I'm trading derivatives, know my market, know my products, looking to transition across, going away and doing a coding course, learning Python makes me more appealing to you? Absolutely.
I think in the last 18 months especially, as the regulatory demands on how fast you need to respond as a surveillance team to regulatory inquiries, the kind of, I would say, the expectation level of even other teams internally about how fast you need to turn around what might be an inappropriate behaviour incident. Coding's really extremely helpful. We would be in, I would say, a somewhat different place if we hadn't have emphasised that a bit around 18 months to 2 years ago, and starting to bring people in. That's another pathway, of course, bringing people in from, I would say, a kind of IT lab kind of background, where their role is coding, perhaps for a surveillance business. You can make that transition into the surveillance business from those areas of the bank as well.
Okay. Yeah, it makes a lot of sense. Well, what about any qualifications? Is there anything I can go and do to make myself more appealing to you?
I think some of the basic compliance qualifications are quite important. One of the things that I know some of my peers in other banks are very conscious about when they hire people from a business background is that they want to make sure that this isn't a temporary move. that it's not a step in for a year until markets improve and they can jump back into another trading role.
Yeah.
I think that's quite important. So the more that you can do to be clear and demonstrate that this is a genuine long-term move that you want to make, that you've made some efforts to to do that, I think that really, really helps.
And is that on the quality of what I do as opposed to the gesture of doing it? Maybe I'm phrasing that wrong, but in my head, if I pay to do my CSI, securities and reg, I've made a gesture and I've spent my money to show I'm committed to it. Is that the gesture, or the learning and the knowledge is genuinely helpful as well? Or
I think both apply. I think the effort is part of it.
Yeah.
It gives a little reassurance around the fact that you do want to make the breakaway. I think in a good interview process, you can normally figure that out anyway.
Yeah.
It's not that hard. I mean, having done it myself, I know what I felt like when I felt I just really didn't want to run a trading business anymore.
Yeah.
I'd done that. I'd done it for long enough.
Yeah.
And I felt I wanted to do something a bit different, but which used all of that kind of quirky market knowledge that you build up over so many years. So I think with good conversations during the interview process, well-phrased questions, you can get a fair way down the road to figuring that out. But certainly, if somebody has maybe even done something in the interim, that's quite helpful. I mean, somebody who maybe has stepped off and tried to launch their own business for a couple of years, doing something, maybe gone into consulting. There's quite a few people that end up in some of the big four consultancies for a year or two to kind of really, I would say, broaden their thoughts about where they might want to end up, and then could make that move as well. So I think consulting skills are also quite valuable. So that move is quite nice. I've hired a couple of people over the last 2 years from exactly that background. So ex-traders who have gone into a kind of an advisory type role within one of the consulting firms, spent a couple of years there, got into that consulting mindset, and if you like, broken the spell. They've got a couple of years under their belt doing something other than running a frontline trading business or sales business. So you've got a fair bit more assurance then that person's committed to a slightly different move. I think there are other reasons too. I mean, some of the things which were definitely in my mind, and I know that's the case with some others, is it's not just a question of maybe making that change, but it's about wanting to contribute as well. Mm-hmm. I mean, I think those of us who have been involved in a trading or sales function for a number of years, it's a very privileged position. You're operating, particularly if you're operating in large banks, you're in an amazing position of trust, and you're able to really build a quite phenomenal career if you're successful. And I think there is a sense in most people that you want some balance. You want to give back. It's an appropriate thing, and it's a thing which a lot of people want to do. I certainly felt that I wanted to do something that I would say was perhaps slightly on the other side of the fence. I wasn't necessarily looking for a surveillance role, but I wanted to do something that used my existing markets knowledge. Ideally would be fairly varied, because I think that's one of the big things that you potentially might miss if you don't go into something like a surveillance role, where most businesses are so, I would say, salami sliced into thin areas of speciality, that it's the same thing over and over and over each day. One of the great things about indeed broader compliance roles as well, you have a tremendous amount of variety in those kind of roles, and you have the ability to call upon different parts of your former experience on a regular basis, and that keeps it fresh and exciting.
Yeah, makes a lot of sense. You mentioned the consultancy path. What about time at the regulator? Worthwhile, or?
I know a number of people have done that. I think if you've been trading for a reasonable number of years, you've you've pretty much got your head around what the regulator thinks. If not, it's quite unusual. You will have been subjected to reg scrutiny as part of the normal exam process and so on, wherever you sit. So I mean, some firms find it really valuable.
Yeah.
I think you see a lot more people go into compliance from the regulator.
Yeah.
I've had some good experiences hiring people from the regulator, certainly, but but not always. You know, sometimes if you spend too long in a regulator, you can get a little bit into that, I would say, overly regulatory mindset where some of your creative thinking gets a bit stifled, and bizarrely, you still need to be quite creative in a compliance surveillance function. You know, there's lots of different ways to approach some of the problems that we face, and it's not always helped by a long stint in an environment that's very structured and very, very closed.
Yeah.
So I think always useful to have sort of recent regulatory knowledge. But I think with all the conferences that we have, the regulatory visit cycle, which is fairly frequent these days, it's not quite as useful as perhaps it was a few years ago.
Yeah, makes sense. Well, what about academics? Is that important to you when you're looking at CVs?
Do you know, I always take it into account. I think you have to, and depends on the precise role. I mean, if I'm looking at, I would say, a senior line SME type role where I expect, you know, some programming skills and some data science skills, I'm going to want to see some academics that link into that. I think that's natural. Some of the SME roles, really, it's about the SME knowledge. I don't really care. Some people have got such granular knowledge on the SME side that they can look at a data set and literally scan it by eye and go, this piece here, that's not right. Let's take a look at this.
Yeah.
You know, they're astonishingly good with that. And I think, you know, there's a really broad sort of church of different places you can find people from. I think some of the and there's a big network, of course, in finance to support this. Some of the ex-military, sort of Secret Service type people, they also have tremendous training, especially those who have had the benefit of working in some of the parts of the security services where there's a big focus on data and mining fact patterns and so on. You know, I've had great success in hiring some people from those sort of backgrounds in the past, and they've gone on to be very, very successful surveillance officers.
Yeah. So in essence, degree's not essential, but a good degree linked to that world, data science, economics, maths, anything risk management led, etc., is certainly of benefit. So for someone like myself, geography from the University of Southampton isn't going to cut the mustard, but
it's not ideal, but if you've got some of the SME knowledge, and if you've got some practical skills, show me a mid-level Python certificate, then you've kind of leveled the playing field a little bit as well. So, you know, I think as we go forward, there's no doubt that there's more and more and more emphasis on the data science side of how we approach problem solving. I mean, optimizing surveillance models and so on, whether they be trade surveillance or comms surveillance. So much of getting that right these days requires at least some people in your team to have a really, really strong grip of data science and how to use mathematics to optimize scenarios that we run. That's only just beginning. I guess I have to use the AI letters. You know, that we see that very much as a helpful tool in terms of being able to, I would say, increase the level of sophistication of the controls that we have. I think, you know, most banks are using it in a huge variety of forms. And the reality is, you know, AI is just an extension of other quantitative techniques and so on, which have been in use for quite a number of years. But it's a great enabler. I mean, some of the background stuff that fits around what we do is really, really helped by AI. I mean, some of the more, I would say, the governance piece that sits behind surveillance, and most people don't think about that in terms of, people look at the somewhat more interesting piece of detecting something unusual and going into a kind of a real detective mode to figure out what really happened. I mean, that's the fun part of surveillance, being able to work on those things. But sitting behind that is, when as an average bank, you've got several hundred different models with several thousand scenarios running simultaneously, that all needs governance. There needs to be procedures written for every one of those scenarios, and so on and so on. So, I mean, there are lots of roles within surveillance for people who are, particularly from a legal background, for instance, who are used to drafting, huge volumes of paperwork. And of course, AI is playing a great role there already in terms of being really helpful in standardizing a lot of that. But there's still, there's definitely roles there for people with a kind of legal bias, and I think that structured way of thinking that lawyers have, and which they develop during their degrees and their sort of legal work in prior careers, again, very, very useful in that space. So that that's another group that I'm always keen to see. I like seeing a law degree on the CV somewhere. That's very useful.
Makes sense. Is there, so I'm just to go back and break apart some of the pieces you just referenced, easier to get into trade surveillance or easier to get into comms surveillance if you're coming from a different background?
I probably have an unconventional view on this, so I'll put my hand up and confess that at the start. I think the thought processes are absolutely the same. I introduced a long time ago a kind of, I would say, an activity link together. I view the asset class knowledge being primarily of importance, and I expect my analysts to be equally adept at looking at trade and comms alerts, because they all relate to the same thing. I mean, if you start to work on a trade surveillance alert, if you really don't like what you're seeing, within minutes you're going to want to see any comms around that trade.
Gotcha.
So you absolutely have to knit it together. I know that's I would say perhaps a little bit controversial with some of my peers who have very separate trade and even ecom and voice are still very split in some banks. Different teams. Trade's another team. I believe in pulling that all together. So I think I'd look for balance. Of course, naturally you have people that have a bit of a bias. They're rather better at interpreting comms than they might be the more mathematical approach on trade. But ultimately, it's all in the same sandpit. I like to mix it all together. And that gives, I think, generally better results.
And you mentioned AI. AI is hitting comm surveillance more than it is trade surveillance at the moment, or?
I think it's easier to adapt and use in comm surveillance initially. We've recently built our own in-house voice comms system, and we actually feed that into our ecom system using the same detection engine for ecom and voice.
Gotcha.
Which has been a real game changer in terms of how we can use our teams, particularly some of our offshore teams, which generally are working a bit more on comms surveillance as part of a multi-sort of discipline team. But it's rapidly catching up in trading too. I think where it helps in trade is the ability to sort of use some machine learning techniques along with other elements of AI and pulling bits of trade and ecom together. So optimization work, lots of AI being used in I would say trade scenario optimization for sure. Where you can compare lots of different scenarios around grouped risks. So where you might have maybe 40 risks in your risk taxonomy, it's a common way that banks look at their sort of market abuse risks. They'll look at different types of market abuse and bucket that into 30 or 40 different risks in most cases. But it's possible to, I would say, to closer group that. There are 4 or 5 here that are similar risks. You can run AI across that and look for those similarities and be able to optimize groups of models at the same time rather than individual ones. So I think there's, those techniques are coming in. They've not been around for that long, but they're definitely being used now. So initially comms, but trade's catching up quite quickly.
Yeah. You mentioned offshoring. John, I want to make that move. I commit to my CASI, I commit to learning some Python coding. Probably takes me a good year to get to a level of both that I've got something to talk to you about and something to be proud of. But the roles are heading offshore anyway. Is it well invested times? I mean, Portugal, Romania, India, Glasgow, there's swarms of surveillance centres now, right?
There are. And I think that's a really interesting question. I have personal views on it, and I think they're shared by a number of others, but not 100% by any means. I mean, my belief is that AI is pushing the boundaries of technology, making it more and more sophisticated. Once you get to a point where you think you've kind of gone most of the way down that pathway, that journey, the first place that you start to find people that are surplus to requirements is actually in the offshore centres, because they're generally operating the less sophisticated controls. Most banks have a kind of methodology where they split the first alerts that come out of their automated systems into levels. So that first level, or level 1 review, is often associated with having quite a high percentage of false positives attached to it. So, out of every 100 alerts, X% of those will just be where the actual models and scenarios are not sophisticated enough to really remove all the kind of obvious things. That stuff's done generally by level 1. So as systems get better, actually the first potential casualties are going to be offshore, not onshore. So if you've made that move, I think what it does do, and this is where it's important to, I think, look at sort of how the function operates of surveillance and where it sits. I think most of the time, it doesn't really matter that much whether you sit the surveillance function in the first line in the business or in the second line in compliance. I would say 2/3 to 3/4 of the banks have it sat in compliance. An increasing number like us are in the first line. Where that has a benefit is that if we can get rid of all of that sort of level 1 noise that's still done onshore, my view is it frees up those SMEs that have made that transition to do more interesting types of surveillance. One of the things we do quite a lot of is what I call proactive event-driven surveillance. So we don't just sit and wait for a system to throw out an alert and then we investigate it. And if there aren't any alerts, we're twiddling our thumbs without a lot to do. We actually behave proactively and we say, okay, 2 days ago, for instance, let's imagine there was a huge 1 or 2 day volatility spike in gold. Very, very active. The price was flying around. What we could do is do a little mini look back, look at all the trades over that couple of days and do a deep dive on conduct during that time. Did we behave very well over that period? Let's look at comms, let's look at all the trades. Let's create a report for the business to actually go back to the business and say, okay, that big vol spike we had last week on gold, we've checked everything. And just to let you know, behavior was very good around that. We can't see any potential concerns in terms of activity there. So event-driven stuff like that, very, very valuable for a business. One of the comments that you'll hear from businesses, whether you sit in the first line of defense surveillance or the second line, is ultimately, of course, the business pays the cost for that. Why am I paying all these millions for surveillance? What do they do for us? Because, of course, if a surveillance team is ultimately very successful, I guess you can argue what the purpose of surveillance is. My kind of inside belief is that it's to effect behavioural change.
Yeah.
To get traders to behave properly, not to commit any kind of market abuse, to deal very fairly and equitably with our clients, to give them the best service, and to show the best executions we can around client orders and so on. So if we've been successful and we've effected behavioural change and traders are not any longer misbehaving, it looks like we're not doing anything. Actually, we've been successful. It's mission accomplished. At least for now. And you could argue what might happen if you just turn the surveillance systems off and let's have a look at what happens. I think history tends to show that people drift back to their prior kind of behavioural position quite quickly if they don't know that somebody is watching them. I think the really key part of surveillance, once you've got a really good, strong set of models operating and you've got good people looking at those alerts, the business knows that if they misbehave in terms of market abuse, they act fast and loose with regulatory rules and so on, they will get caught. We have very effective detection systems. So do most of the big banks now. They've got very good systems at spotting this kind of inappropriate behaviour. And if it's there, it'll be detected. So you've done your job. You've got it done quite well. But I think the other way to answer that question from the business, why does it cost me all this money? What do I get for it? Well, you get regulatory reassurance. I often think of it as a kind of option trade. And I may or may not have said this once to my global head of markets business, where I said, look, you think it's expensive, but it's X million to run surveillance. But if we're not here and you commit some of really very inappropriate market abuse activity, you're going to be fined potentially $1 billion. So really, it's an option trade. It's X million cost against maybe $1 billion fine. How lucky do you feel? You're the head of trading. You decide. And that's quite an interesting way, I think, to think about it. And I think these I would say, proactive ways of demonstrating the value from surveillance, like these proactive reviews or thematic reviews. Maybe we study behavioural trends quite heavily, and we've developed a system which effectively was really originally designed for detecting potential rogue trading, but we've now added behavioural data characteristics to that as well as transactional, and it gives us now quite a lot of trend information on potential offence types or even alert types as well. So we can see that maybe there's lots of potential front-running alerts. Now that's deemed to be a particularly egregious behaviour. Nobody wants to see front-running of client orders. So we quickly look at that and we do a deep dive on the thematics of that. Is our model working properly? Hopefully it's a model glitch which is showing that there might be lots of front-running. All of those alerts would have been investigated to check if they were valid or not anyway. And if we're finding that they're not valid, then why are they triggering in the first place? Let's look at that. So I think some of those thematic reviews are very key. But I do think behaving more like an extension of the business is a really important trend. It's something we follow. We have a weekly morning meeting where we look at the week ahead. What's the market activity going to be like? Although our systems, of course, run kind of T+1 like everybody else's, we don't get to see alerts until the day after business has been done. Nevertheless, I can look forward and I can look at the economic calendar and say, well, what economic numbers are we seeing this week? Where do we expect there to be volatility? And how are we going to disposition our forces, as it were, in surveillance to look at those potential spikes in volatility? You know, non-farm payroll number, always an emotional number in the US, often has the ability to move markets quite a bit. The day after that, we probably ought to have someone who's got the time to deep dive into that and take a look at any resulting volatility. So adding that kind of market-driven context to businesses starts to answer that question. And I think people coming in from the business into surveillance, they're ideally placed to work in that way. It's very familiar to them. They're used to knowing what's happening in the week ahead rather than always the week behind.
Yeah.
And that kind of work is something that they I think, you know, well, we know that they do excel already at that. And I think that's quite an interesting way to use that skill set.
Yeah, it makes a lot of sense. I was actually just going to ask, and it kind of follows on nicely to what you've just said. Once we've made that move, whether it's from the business in or even if it's just getting into surveillance in the first place as a career, I always remember back, this must be 7 or 8 years ago now, in and around a Christmas period, we had a big project for you where we put 10 people into your surveillance function at speed, and your brief to us was get me ex-business people, right? I want people that know the products, etc. And on reflecting on that, because I think we put 10 in and that's a big project to deal, but in that, guys, you've then got to manage these 10 people, and on day one, how do they make a difference? How do they prove to you, I'm learning, I'm growing, I'm projecting? I was going to say, what do they do to make a difference? But you've already given me a bit of an answer there, right? Because actually forward-looking is a skill that they can bring instantly to their piece and their bit of the...
Very much so, yeah. I mean, it was an interesting time because I was tasked with building a capability very quickly. You know, we had a big project to build, and I knew that the group of people we had, was way too small, and very, very, what I would call very traditionally focused surveillance people. I would say at that time, it is actually around 10 years, you're absolutely right. I think at that time, an awful lot of surveillance was done often by ex-operations people. They didn't really have any real significant business knowledge. They weren't very familiar with compliance practices. They certainly weren't used to dealing with regulators. So there are quite a lot of missing things there. Some of the systems they used were, and indeed we used at that particular institution initially, were relatively old-fashioned. And so we had a lot of things to do at once. I knew I had a base to be able to team up people. So, you know, the 10 or so people, I think it ended up being a bit more in the end, but the bulk was that 10 key sort of quick starters who I wanted to plug into the different functions. And I had a sort of buddy system already figured out where they would have somebody to work with that could get them feeling comfortable with the surveillance piece itself quite quickly. But I think being able to let them do things that they were pretty familiar with and grow into the rest of it. You know, they already had some exposure to compliance because they were front office people. They were used to working with compliance advisory in there. And they were predominantly traders, or a couple were sales. But mostly traders. So they had that exposure. They'd seen and been part of various discussions with regulators, so I knew that the kind of mindset from that perspective was already there. And it did work quite well. Now, I think doing it today, markets have moved on a bit, and I think the balance is, right at that point, there wasn't enough, I would say, proper access to data to take a real data science approach in-house. We'd only just built our own data lake for surveillance. That was very forward-thinking 10 years ago, believe it or not. I don't think anybody else had their own data lake. Everybody was, porting in information into surveillance systems via individual feeds, which is very clunky, very expensive, prone to breakdown. And so on. So we'd done a lot of the kind of basic pipe work quite quickly. And that enabled us to build, quite a number of things very, very fast. But I think plugging those people in with the business knowledge was a huge game changer, that's for sure. We were able to take this asset class approach right from day one. I mean, that was my kind of first, I would say, big change for the bank was, I said, really, really almost immediately, I want to move away from this trade e-com voice thing. That doesn't work. Those are just enablers to investigate. The fact that they're different systems. I mean, traders are used to using 8 or 9 or 10 or 12 different systems. To give them 3, that's not difficult. They're used to multitasking. Don't worry about that. And I think that worked quite well. And I think that the general mindset of people coming from the business side is they're proactive, they're flexible, they always they're always driven because they have to be in those kind of roles, and they're quite flexible, and often I think people outside banking smile when I use this word, but they're very creative. I know lots of people think bankers can't be creative, but they really can, and I think in these roles they get if they get their expertise right, they can be quite creative in these roles, figuring out how to resolve the problems that exist in surveillance.
Yeah, it makes sense. It's interesting. I'm just reflecting back to when we worked on the project, and it was very easy to find cash equity or derivatives people that wanted to make the move, right? Mainly because their world and their business had changed. The commodity side was harder, and I think a lot of that is understanding the difference between regulated and unregulated commodities businesses, MiFID regulated businesses or not, etc., and whether you're trying to keep things outside of what you can and can't do, or whether you're trying to make sure you're inside. And actually in that guise, a lot of the chats we had in the past were when people came from the operational side, it's because they understood the trade life cycle from front to back. But actually reflecting on the pieces you've said, while they understand the trade life cycle, they don't necessarily understand all the regulatory aspects and the reason we do the things we do, if that's the right way to phrase it. Would you still say commodities is one of the harder parts for people to make that move or transition, or?
I think it's, I wouldn't say it's necessarily harder. It's just that I think what has changed is that banks kind of dip in and out of commodities a bit. They don't consistently sort of trade the whole product set. Quite a lot of banks specialize in particular areas. Almost everybody does precious metals because it's kind of an adjunct to FX and and is sort of joined at the hip. But when you look across, for instance, oil, where do you stop? If you trade oil, do you then trade Jet 1? If you trade Jet 1, do you trade the other distillates? Because if you don't trade the distillates, a lot of people are pricing some things off of what they call the crack spread, the element of spread between crude and whatever you've distilled, whether it be kerosene, which is effectively Jet 1, or it might be naphtha, it might be some other distillate. And there's a spread between those costs. So, some people will trade some spreads and not others. Some will do soft commodities, some don't. Some link in physicals as well as financially settled commodities. And of course, if you do physicals, do you then do freight maybe? Because there's a direct link to, if you're going to have to physically deliver a few 100,000 barrels of oil, well, you're going to have to get it from there to deliver it. So, I mean, and I think as banks kind of move around that circle about what they do and don't trade, it makes it a bit more difficult to staff. But I think you can split it, and I think the way that you described it, Ben, a minute ago was very accurate, and that is that the financially settled stuff, that particularly the listed stuff, that's pretty easy. There's a couple of reasonable trade surveillance systems that can handle that. Particularly the listed futures stuff. I mean, that for me, that's kind of like any other futures market. It's really not difficult to trade or surveil. The other stuff that's the really funky stuff when you're starting to look at some of the other energy products as well, the different ways that electricity trades and how that fits into what that power is being generated from. And, lots of people will trade, for instance, the diesel or oil power station fuel effectively versus electricity because, the relationships.
Yeah.
So there's a lot of odd kind of spreads. And I think finding somebody that's done all of that's kind of impossible.
Yeah.
You get people coming out of the big energy companies for sure. I think there are a number of people in the market who've come out of places like BP and Shell and so on who have been part of their trading operations and therefore have got good transferable skills. But I think it's really tricky to until you look at each individual bank and know what subset they're trading. What do you need and how does it work? If you're trying to find somebody that's done it all, very, very tough. For sure.
And just thinking about the types of institutions in that, guys, then, if I'm looking to get into surveillance, do you think it's a different skill set for someone doing it in a bank, someone doing it in a broker, someone doing it in an asset manager, or someone working for one of the vendors, for example?
Definitely. I think the granularity of product knowledge is absolutely required in banks because their activity style is so varied that you really need to know your stuff. You need to be the professor of that product to function and really have a good knowledge. I think if you look at some of your other examples, asset managers, for instance, they have a very different risk profile. They're not investing their own money, they're investing somebody else's. So your primary risks are, I would say, predominantly around things like MMPI. So you've got a couple of key risk points. The structure in most of the asset managers, if I can sort of picture it fairly simplistically, is portfolio managers figuring out what they want to have in their portfolios. They have an execution desk that often they will funnel their trades through. And it's that kind of relationship where the risk lies effectively. Portfolio managers are in some of the big asset managers moving around huge amounts of money, very large percentages of equity in publicly owned companies. There's an MMPI risk there if they decide that they might like to buy a few shares of that company before they go and buy 50 million for the fund. There's front-running risk there. You've got similar kind of risks on the execution desk. They're receiving an order from their own portfolio manager. Oh, that's a big order. That's going to move the market. If they behave inappropriately and do some PA dealing, you've got PA dealing risk there as well. Effectively, MMPI again, front running an order from the portfolio manager. So you've got very specific risks in asset management where I would say you can probably find that people with a bit more of a generalist but reasonable market knowledge would fit there. You don't have to be so granular because the risks are not so much trading risks per se. Trading in the sense that if I'm the execution desk guy and I front run a portfolio manager's order, I would do that by trading PA. It's still a trade. But it's not a trading risk, as it were. It's an information misuse of information risk. Those are the predominant risks around. I think the asset manager space, and it seems that I think what has changed is that, and I'm sure you've seen it in your business, is that asset managers are being pushed to take these risks much more seriously than they did in the past. Lots of larger asset managers especially have built their own surveillance teams. They appear to be growing from the anecdotal evidence I hear around the street. So I think that's building. Brokers too. I mean, brokers have changed an awful lot. If we deal with brokers for a minute, brokers have gone from being, particularly those that were predominantly voice, just for speed of execution now, they're much more electronic than voice.
Absolutely.
Some products still get done by voice.
Yep.
FX options, particularly, stuff like that. Yeah, there are a few little weird subsets, that stay as voice, because actually you can't really, for instance, FX options, especially, how are you going to put thousands of strikes up on screen? I mean, it's just not practical. So a good reason for that to be like that. But effectively, they're kind of like an exchange. They're an organized trading facility, or whatever kind of legal structure they adopt. You have to pick one these days. So are they an OTF, or are they something else? Are they actually an exchange? Maybe you're both for different, one for one product, one for another, and that brings different risks with it. So definitely see that. Regulators are, I think, particularly here in the UK, are very strongly looking at the fact that kind of dual capacity brokerage, where you can have screen prices and voice prices in exactly the same product simultaneously, they're really clamping down on the kind of market abuse risk that brings, for sure. So, I certainly know of, no secret as to who it would be. There's a couple of really enormous brokers that kind of run most things. They're both aggressively building their surveillance capabilities, because I think, like some of the big exchanges, even in the derivative space, they realise that they've got kind of two types of risks. If you're an exchange and you have a rule book, which all the big exchanges have to, you've got a surveillance risk around, are people following my exchange rules if I'm an exchange guy, but also not only are they obeying those rules, which they have to do, but are they using, for instance, some direct market access pipeline from a bank to actually commit market abuse, coming down a bank pipeline, which effectively partly disguises maybe who's doing what. So you kind of need almost two different bits of surveillance within an exchange to cope with that. And again, you've got some very specific skill sets where ex-market individuals would be well positioned to add some value in both of those areas.
Yeah, it makes a lot of sense. Rob, thank you so much. Been a real pleasure chatting. Really.
Oh, likewise. I mean, I really appreciate the questions. I mean, we're in an industry that's evolving so quickly. It's really essential that we have this flood, this flow of new blood into the business. Lots of different areas, as we discussed earlier, where it can come from. But we really need you to intermediate that and help us get the right people in to build the next kind of step and generation of surveillance.
They're the bits that have been so helpful, right? We're asked on such a frequent basis, how do I transition, not just from business to surveillance, I just mean full stop. People come to us and say, whatever, I'm in the back office, I want to get into the middle office, I'm in the middle office, I want to get to the front office. We plan to try and cover and engage with individuals on similar topics across everything. But the biggest thing that comes to us frequently is people saying, I want to make a career change, basically. And I'll be very honest, most firms don't phone us up and say, go and get me someone who doesn't do this now, and we'll teach them how to do it, right?
Go get me a current expert.
Exactly that. People come to us and say, we've got a 10 out of 10 skill set, go get us a 10 out of 10 skill set. We're not interested in someone that's got 6 or 7 or 8 of them. They need to have 10, right? Now, I've got an opinion on that anyway. You hire someone in that does exactly the same job elsewhere, they get bored just as quickly with you as they were in their last one, because they're not learning or growing. So for me, the push I always give is, please don't hire perfect, hire nearly perfect and train and develop, because that's what people want to do to grow for the future. But if we put an advert up tomorrow saying X business into surveillance, we would get drowned in applications. The biggest thing I've been trying to help educate people on over time is how you can make a genuine difference. And that's what I take from this today more than anything is, go look at your CISI or other similar qualifications. Go look to get some exposure or experience if you can through your network or through other people in that vein. Consider learning coding or anything around the data governance piece. You might not be a coder, but you might not be a numbers person, but you might have great written English, so you can get involved in the governance side. There's a variety of paths, and even though AI is coming, even though offshoring is coming, it doesn't sound like these jobs are disappearing. Certainly not in my generation doing what I'm doing.
Not at all.
And in that guise, it's really enlightening for us to be able to say back to people, like, you've got some advice for not only someone who's made that transition themselves, because you were ex-business and obviously now surveillance, but has hired time and time again people that have made that transition and that move. So thank you so much. It really is appreciated.
It's been a pleasure.
Pleasure.
Thanks for having me.
Thank you.
Thank you.
Cheers.